Our President and CEO, Betsy Gardner Eckbert, is here today to tell you a little bit about this topic and our current speaker. Betsy, I'll pass it to you.
Great. Thank you so much. I'm thrilled that you guys are all with us today. And excuse me, welcome to our Securing Your Business webinar series. We put this series together in alignment with our mission, which is to convene people and ideas for the benefit of our businesses and our community. And we have been able to pivot to a new business model where we're convening our community and our stakeholders digitally. Very grateful to our team. Today we've got on the call Tiffany Cahill and of course Amy, your host, are here to help us deliver content that we hope is going to be extremely useful to all of you. Tomorrow is a very, very big day in the life of lending in our country. And so I'm thrilled that we've got an expert here. I will say that the U.S. Chamber has been a tremendous asset to us. We're members of the U.S. Chamber, and throughout this crisis, they've been generating content that's easy to read, which is really saying something because the bills that are coming out of Washington, I think the second package was 1,500 pages and this current CARES Act was 900 pages. And so that's an awful lot to motor through, and we're getting material from the U.S. Chamber that we can really action and understand quickly, which time is of the essence right now. So I'm grateful for what they've done. I'm familiar with our speaker through the work I've done with the U.S. Chamber to become certified to lead a Chamber of Commerce. And we've got some very talented people working up there, kind of fighting for the business community at large in Washington. So without further ado, I'm going to introduce our speaker, who's Brince Manning, the Congressional and Public Affairs Manager for the U.S. Chamber of Commerce. And Brince is the manager for the Southeast region. He supports Alabama, Florida, Georgia, Mississippi, North Carolina, South Carolina, Tennessee, and Virginia. And the mission of the Southeastern Regional Office is to develop and maintain the region's legislative, political, and grassroots resources to achieve the U.S. Chamber's public policy goals. Before joining the U.S. Chamber, Brent served as the Manager of Government Affairs for the Jacksonville Chamber in Jacksonville, Florida, where he worked to advance the legislative priorities of Northeast Florida on the local, state, and federal levels. Previously, he managed a campaign for Congressman Lynn Westmoreland and worked for Georgia's Secretary of State, Brian Kemp. Brent lives in Atlanta and has been involved in regional policy since he graduated from the University of North Georgia. Brent Manning, welcome and thank you for being with us today. We appreciate having you here.
Well, thank you, Betsy, and thank you to your team. You guys are awesome. We appreciate your partnership with us. And as always, after this, let us know how else we can help. To all of your members, thank you for joining. I know this is not an easy time, but thank you for doing everything you can to help us avoid a economic catastrophe, really. So on the Federal CARES Act, just to give you an idea of the scale, this is a $2 trillion package, which is just under 10% of our regular GDP in this country. This package is designed to be robust because the idea is that this is a bridge that helps us avoid a prolonged recession and downturn and allows that once regular commerce can begin resuming, we can get back to some sense of normalcy. In addition to the $2 trillion face value of the package, because some of the funds, actually, if you could skip to the next slide, because some of the funds can be used by the, by the Federal Reserve, it can be leveraged to provide an additional $4 trillion in support for the economy. We'll talk a little bit about individual provisions, which I'm sure you're aware of. Perhaps the most important, the automatic payments that the federal government is making to the individual taxpayers. They will begin the process of direct depositing, I think, in about 2 weeks. These funds to taxpayers across the country, the amount of $1,200 per individual, $2,400 for joint returns, plus $500 per child. And it begins to phase out for incomes above $75,000 or for individuals, and $150,000 for joint income. We already know, as you saw last week, over 3 million initial unemployment claims. And as much as we can to support business, we're going to have a rise in unemployment almost irrespective. And so this bill includes some fairly robust expansions of unemployment benefits, most importantly on restrictions on eligibility for unemployment. Remember, if you go through unemployment, applying for assistance, there are all these qualifications about how long you've been employed, how long you have to wait, etc. These eligibility requirements have been amended as it's related to the coronavirus. In addition, the federal government is providing another $600 on top of regular state benefits through July the 31st. States simply have to agree to accept this additional benefit for their residents, and I would be shocked if any single state did not accept that, the money. A lot of questions have come up about whether or not individuals will remain on unemployment. This was a hot topic right at the end of the Senate negotiations, particularly given the enhanced benefit. So it's important to remember that eligibility ends when an individual can return to work. So if an employer is reopening and calling employees back, and that employee is available to work, but they choose not to, then their eligibility, individual eligibility ends. So how do you access this? You still go through your state unemployment office. It's not the federal government. You still go through the state. Okay, so let's move on to major provisions for employers. We've really broken it down into three groups: the provisions that are available to all employers, the provisions available for larger employers, and then small businesses, self-employed, independent contractors, and nonprofits, which is where we're going to spend the bulk of our time today. We'll start with the provisions that are available to all employers. The first is a payroll tax provision for employers who pay payroll taxes. So think about this. Everyone who's writing a check to their employees, after you write that check, you normally write another check to the federal government covering payroll taxes for both the employee and the employer side. Under this bill, an employer may choose to delay their part of the payment of the payroll taxes, which is 6.2% of Social Security wages. They can then delay paying that between now and January 1 of 2021. If they choose to delay, they have to pay 50% of the accumulated amounts that would have been owed by December the 31st, 2021, and the other 50 by December 31st, 2022. There is an important caveat here. This generally is available to all employers except if you have had a loan forgiven under the Paycheck Protection Program. This is the small business program that we're going to talk about shortly. Other tax changes that are important: net operating losses or NOLs is if you're a business who's been operating, who has an operating loss and you want to be able to use that against prior taxes paid. Now operating losses are expanded from 2018, 2019, and 2020, and generally can be carried back 5 years. Also applies to pass-throughs and sole proprietors. If you're a business, this is primarily for corporations that have AMT credits, and you can accelerate the recovery of those. You also have the opportunity to increase your interest deductibility for 2019 and 2020, and importantly for restaurants and retail establishments who in the past couple of years may have made investments into their property. They can accelerate the recovery of that as well. I know that is a good thing because they're wondering where is that. All of these provisions are really centered on one idea: improving liquidity for employers. At the moment, when employers have no revenue coming in, it's it's obviously hard to pay the bill. So these provisions give employers greater access to liquidity. It's not really about reducing overall taxes. It's more about timing, giving employers more access to the cash today to be able to pay their employees. Another provision is that that's available to all employers is the employee retention credit. Now, this was a late, thank you. This was a late addition to the bill. It was not in the early versions. So as a result, there has not been much attention paid to it. The retention credit generally applies to employers. We're talking about businesses, but also nonprofits, for example, who are fully or partially shut down as a result of the coronavirus, or have a 50% drop in gross receipts in a quarter, and they're eligible for this until their gross receipts get back to 80% of their prior year's amounts. Think about this. This is designed to help employers who've shut down or lost revenue, but who continue to pay their employees. How much is this tax credit worth? It's 50% of the wages paid by the employer up to $10,000 per employee. That's a fully refundable tax credit. So think about it as a $5,000 tax credit available to the employer. There are special rules for employers with more than 100 employees and employers with less than 100 employees. If you have more than 100 employees, the benefit only applies to employees who you are paying but are not providing services. So let's say your business is shut down, you've had a drop in revenue, your employee is not working, they're not teleworking, but you continue to pay them. You can access this credit as a benefit in recognition of the fact that you are paying them. If you have 100 or less employees, the requirement that they not be providing services does not apply. It's available to all employees you pay during the eligible period. The eligible period being when you're shut down or when you have a quarter with this drop in gross receipts relative to the prior year. Importantly, again, here, the Paycheck Protection Program, that is the small loan grant program we're about to talk about. If you receive one of those loans, because it can be converted into a grant, you cannot take advantage of the employee retention credit. We understand employers may have cash flow problems, and one of the things for employers who take advantage of this is we expect the Treasury to will be providing guidances that will allow employers to get an advance on the payment credit, which will help them pay their employees today. Okay, on to mid-size and larger employees. The bill in total the bill includes in total $500 billion to the Treasury Department to support loans, loan guarantees, and Federal Reserve credit facilities. Federal Reserve credit facilities, you may have read about them or remember them. These are things the Federal Reserve creates, for example, to support commercial paper, money market funds, etc. And they do these as a regular course of business when we have a financial crisis. They use them very liberally in 2008. So 454 billion of the 500 billion is directly for businesses at large. There are special programs for the airline industry and critical and national security businesses that make up the remaining 46 billion. We expect in the coming days, we'll see the Federal Reserve issue more guidance about these credit facilities and actually launch them, including the terms and conditions. Now, remember, this is not going to be a situation most likely where the company goes directly to the Treasury Department or the Federal Reserve. Instead, what the Federal Reserve is doing is supporting financial institutions in the U.S. To make more loans available. There are some restrictions that go along with this in exchange for accepting the benefit. that could include stock buybacks by the company, so long as their loans are pending, and for an additional year, and limits on increasing executive compensation. Okay, so now we're on to small business, self-employed, independent contractors, and nonprofits. And this is where we're going to spend the bulk of our time. The provision that's getting the most attention is called the Paycheck Protection Program. It's $349 billion in loans for small businesses that are generally defined as employers with less than 500 employees. Also 501c3s, the self-employed, sole proprietors, and independent contractors. A way of thinking about this is if your business is generally qualified for an SBA program, you're going to qualify under this program as well. In addition to that, some employers, some businesses who would not qualify ordinarily have been added to the list. That includes, for example, independent contractors and the self-employed. It also includes restaurants and hotel folks who would otherwise be ineligible because if you add up all of their locations, they have more than 500 employees. But under this bill, it says we're going to judge you in the accommodation and in the food service business on a per location basis. So don't automatically assume that because you're not eligible for a regular SBA program, that you're not eligible for the Paycheck Protection Program. So how much can you borrow? You can borrow up to 2.5 months of your average payroll expenses. There's a formula to calculate that average monthly payroll. And once it is calculated, just multiply it by 2.5, and except the loan cannot exceed $10 million. Where will you get the loan? You will get it. So a lot of folks assume you go to the SBA. You actually don't. We do not think individuals will go to the SBA. Instead, you're going to go likely to a local or national lender. Now, lenders who are already SBA 7A lenders and participate in that 7A program are automatically qualified to provide these loans. But the Treasury Secretary tomorrow is going to give authority to additional lenders as well. And we've learned of a few of those already, but I think the full list is expected to be out tomorrow. Let's see. Yeah, so we're going to see a bunch more lenders, mostly because this is a generous loan program that is backed 100% by the federal government. There are very minimal requirements as far as underwriting these loans. There's no collateral required, no personal guarantee is required. A really unique feature of these loans is that the loans can convert into grants based on what the borrower spends the money on. So the way the bill is laid out, it looks at the 8 weeks of your expenses after the origination of the loan, and you get to tally up everything that you spent on payroll, that you spent on rent for the business, interest on mortgages that are tied to the business, and what you spent on utilities. And you can get a dollar for dollar forgiveness of your loan up to that amount. Of course, you can't be forgiven for anything. Your forgiveness can't exceed the amount that you've actually borrowed, of course. There are some conditions. Your loan forgiveness is reduced proportionately if you reduce the number of full-time equivalents that you had relative to a benchmark period, either the year before, all of 2019, or the first 2 months of this year. The loan forgiveness is also reduced if you reduce wages for employees making less than $100,000 by more than 25%. So you can't reduce those wages less than 25%. And that's a good note about wages above $100,000 as well. In your calculation of payroll expenses, you get to count the first $100,000 that you paid an employee, but nothing beyond that. So this is really targeted at those middle income earners. Employers can also avoid a reduction in the forgiveness because we know a lot of employers are having to lay off folks. If they bring back employees and restore their wages by June 30th of this year. So think of it this way: you've laid off employees, you've reduced wages or hours to help get you through this period of time. If you made those reductions between February 15th and April 26th of this year, you'll need to restore those employees and or bring them back to their previous wages by June the 30th in order for your loan to be forgiven as a grant. Additionally, after April the 26th, you can't make any changes to your number of employees or wages until after June 30th to be forgiven. If you laid off an employee or reduced hours prior to February 15th, you do not have to restore them to qualify for forgiveness. We often get asked, what if the business is shut down, or if you happen to be in an area where the governor, like Florida, has said essential businesses can't open. That doesn't matter for this purpose. What the loan is looking at, after making the loan, were you paying your employees? The whole idea of this bill is, our paychecks still moving? So remember, yeah, I mean, that is the gist of the bill. I mean, the government wants employees to keep getting paychecks. Okay, so you can learn more about this program. There's a website listed here, and it takes you to a 4-page document that tells you, am I eligible? It helps you answer questions. Am I eligible? What will lenders be looking for? How much can I borrow? There's a good guide on how to get that monthly payroll average figured out.
Hey, Brent, I don't mean to interrupt, but I just put a link on the chat box. Amy Morgan's just put it on too. That graphic that the U.S. Chamber did is fantastic. You've got it up right now. If anybody wants it, it's in the chat box, the link to it, and they can download it and have it on their own computer. It's really good workflow for anybody who's interested. Sorry to interrupt.
No, you're good. You're good. And somebody earlier asked me, do I factor in an employee's tips that they would be making? Let's say they're a server. Well, that is included. So that's listed in this document. So I encourage you to take a look at that if you're thinking about going after one of these loans / grants. Let's see. All right, so another provision from the bill that benefits small businesses, also self-employed and independent contractors and nonprofits, is the SBA Economic Injury Disaster Loans, also known as EIDL loans. EIDL loans have been around for decades. If you've been affected, and maybe y'all in Florida have, by a hurricane or a tornado, for example, you might have applied for and received an EIDL loan. Who's eligible? So small businesses and nonprofits, including faith-based. No restrictions here on the types of nonprofits. So 501c6s are included. It's any entity that is a nonprofit that has fewer than 500 employees, and again, sole proprietors and independent contractors. So this is an actual loan. This is not a loan in general that will convert to a grant. You can borrow up to $2 million in working capital, and that's to be repaid over 30 years. And you can see the interest rates there. If you take out this loan, payments are deferred for up to a year, so you don't have to immediately start paying on this loan. They made it easier in this bill for individual businesses to apply. Your loan is going to be based on your credit score. You don't have to immediately produce tax returns. You can borrow, you can get up to $200,000 without a personal guarantee. No collateral is required for less than $25,000, or for $25,000 or less. Beyond that, there's general security interest, or sometimes it's secured with real estate. but they are trying to move away from that, from real estate in this particular instance. So there's an important feature that was included, brand new as a result of the CARES Act. If you're applying for an EIDL loan, one of these injury disaster loans, you can request that you be provided an emergency grant, which they have to provide within 3 days. Although I talked to somebody earlier today and they say it's been 3 days. I really think the ball gets rolling at the end of this week. But anyway, they're supposed to get you that within 3 days up to a $10,000 emergency grant. The bill details what you may use the grant for, but there's really no requirement. This $10,000 grant does not have to be repaid even if you're denied the loan. So let's say you apply for the loan, you request the emergency grant, you receive it, and then you're denied the loan. You don't have to pay back that $10,000. You should think of this as essentially an emergency grant for small businesses. Now, there are some interesting, important interactions with the Paycheck Protection Program that we just talked about. Importantly, for example, if you end up with both, and generally you would end up with both because you've already received the EIDL loan, and maybe now that the paycheck protection laws are being set up, you're applying for those as well. You can roll them together, but you can't get double forgiveness. The $10,000 would come off the Paycheck Protection Program's forgiveness. There are also some requirements with respect to the paycheck protection loans that you can't double dip. In other words, you can't take out 2 loans to pay the same bills. If you're thinking about doing both of these, you're going to want to think through these restrictions. Don't assume that you can do all these programs and just stack them up. What they've done is make the Paycheck Protection Program the most favorable by far, and then tacked on to other programs that don't avail themselves to the Paycheck Protection Loan. And that includes this EIDL loan. You won't apply for this by going to your local bank. You apply for this on the SBA website at sba.gov. This is one, again, where chambers can apply. Chambers can also receive, by the way, the employee retention credit, but they have to be substantially shut down, or that reduction in revenue relative to the prior period. So you'll want to think through that with the folks that do your taxes. Okay, on to paid sick leave. Now, with respect to small businesses, there are some provisions we've received a lot of questions about that don't come from the CARES Act. They come from the Families First Act, which was the prior bill, often called the Phase 2 bill. What the Phase 2 bill includes was a requirement that employers with less than 500 employees provide paid sick leave, 10 days of paid sick leave to their employees if it's related to the coronavirus. Sick leave is taken when you're ill, when you're quarantined, or you need to take care of a family member who is quarantined, or if you're taking care of a child because of school or daycare closures. Leave is paid at your regular rate, but it's for a maximum of $511 a day, unless you're taking care of a family member, and then it is at a two-thirds the regular rate with a maximum of $200 per day. Importantly, the federal government will reimburse the employers 100% of these costs up to the daily maximum that you pay your employees. This is a refundable tax credit, and understanding that businesses often have liquidity problems as well, the Treasury Department is taking steps to allow businesses to request in advance on that refundable credit so that you have the resources to pay employees who are taking sick leave. This is in addition to what the employer already provides, including what you provide pursuant to state or local laws. There's a lot of talk about businesses with fewer than 50 employees being exempt. The law does not provide that an employer may be exempt, but they can only be exempt with respect to leave that's tied to caring for a child whose school or daycare is closed. And only to the extent that if providing the leave threatens the viability of the business. If you think this applies to you, I encourage you to check out the Department of Labor's guidelines. They're posting new stuff daily, and they can explain further and do a better job on that topic than I. Finally, paid sick leave is generally not available for an employee where they can telework. That only applies if the employee is taking care of, for example, a child, and they can also telework, for example, by staggering or changing their hours. Okay, on to the paid FMLA leave slide. So if you're not familiar, this is the Family Medical Leave Act. This was also in phase 2, the previous bill. It's a law that generally allows for 12 weeks of unpaid leave. What the phase 2 bill did say that with employers with less than 500 employees, they are required to provide up to 10 weeks of paid family leave if the employee needs to take care of a child due to a school or child care closure caused by the coronavirus. And that is the only reason for the extended leave. When you think about the interaction between this and the sick leave, an employee would take 10 days of sick leave first and then be eligible for up to 10 weeks of paid leave. Here, leave is paid at 2/3 the rate, regular rate, again, maximum of $200 a day, $10,000 in the aggregate. It's in addition to what you're already providing under state and local law. It's fully reimbursed the same way by the federal government. There are similar exemptions for employers with fewer than 50 employees, same as paid sick leave, and it doesn't apply to an employee who can telework. So, for more information on pretty much all of this, I encourage you to check out the U.S. Chamber. We have a great website, a great program called CO. It's a chamber program that focuses on small businesses, has survival guides, tips, and other things that are available for small businesses. And you guys can see the website there. That is my overview of the CARES Act, and I'm happy to now. I will say real quick, if you want to pursue one of these loans or grants, I encourage you to speak to your lender. The SBA, again, has a list, and the Federal Reserve's coming out with a list tomorrow. They are the experts. I will answer what I can. I'm just a poor old federal lobbyist. You don't want my advice anyway, but I'm happy to try to answer what I can.
First of all, Brent, we're not buying poor old lobbyists. Thank you so much for elucidating this. We've been hearing this. This is probably my 3rd recitation. I think it takes that many times to get some of this through. What I will say before we start, we do have plenty of time for questions, and it's great to see so much engagement on our chat. Amy's going to take us through to those in a minute. We have one point, Scott Thompson just said, thanks for being a good lobbyist, Brent. We really appreciate what y'all have done up there, because you're going to keep the lights on for business, which is ultimately going to help families. So we appreciate that. But one thing I do want to make sure that everybody on the call knows, if you're not currently receiving our daily briefing, it comes out every day at midday, and it will have the graphic that we just put up, which is extremely well done with what to do, how to calculate payroll, exemptions, all this kind of stuff. Now, if you scroll through the chat, you'll see a link with it on there if you want it right away. Tomorrow morning, we'll be leading our briefing with that we come out with at midday with that graphic, which really boils all of this down. And then, Brent, is it possible for us to get your slides? Because we can share them on our website as well. So we'll have bottled up Brents on our website for y'all, and we'll have the graphic, and then we'll have these slides as well. So at this point, I'm going to hand it over to Amy, who does a heck of a job with moderating all these questions.
Okay, thank you, Betsy, and thank you, Brent. We have questions coming in. Before I start reading a couple of the questions, I want to share how you can ask a question if you'd like to. There's two ways. One, you can raise your hand in Zoom, and I'll unmute you so you can ask your question directly. Or two, you can type it in the chat box. Please bear with me as I go through these questions because I'm getting a few coming in at us. And you can find the chat box or the raise hand feature at the bottom of your screen on your computer. Hover there, click on raise hand, and I'd be happy to unmute you. So I will start with John Karen. I see you actually had one of the first questions in the chat box. So I have now unmuted you on our end, and if you unmute yourself, you can ask your question. Got it.
Thank you. Yes, I've been reading today, especially in various publications, that the banks are confused and there's a lot of frustration growing in terms of the loan application process. It seems to be inconsistent, and many of the banks don't actually know what it is. In fact, there was a Wall Street Journal article today entitled "The Rush for 350 billion in small business loans starts Friday. Banks have questions," and it was all about frustration of small businesses and the banks not knowing what to ask for. So I just wonder if you have any insights into that, and if any clarity is coming, because that would be a major problem for many people.
That is a problem. I think that they rolled it out. They gave themselves about a week because it was signed last Friday. And I know they were still ironing things out. And I think it's my understanding they were hoping to hit the ground running starting tomorrow. So I hope they iron out these issues. But I know at least the Treasury was still figuring things out throughout this week. So I'll be curious to read that article though.
Thank you, John, for that question. Okay, next question that we have is from Peter Moore. Is there any restriction on what the IDL program proceeds can be used for? If you can borrow at those rates, could you effectively use that to refinance?
I believe you can, yes.
Thank you. All right, next question. Can you give any insight on how long it takes to hear back? I have a question about how someone has not received a confirmation email. I'm not sure if you would have any insight to that.
Into the time frame of receiving the money?
Well, confirmation is what the question is. They say they haven't received anything back. So once submitted, what should the process look like? What should people expect to make sure that it went through properly, I guess?
Yeah, so if we're talking about the Paycheck Protection Program, I know that Secretary Mnuchin was telling lawmakers throughout the process that he wants this to be as quick as possible. I mean, he wants you to go in, apply in the morning, and receive the money that evening. I mean, that is the time frame that he wants this to work. Now, that's probably a little optimistic, but I mean, the government wants small businesses to get this money. They are not looking forward to any type of a recession, so they want the money out the door as quick as possible.
Perfect. Thank you for answering that question. Next question relates to the restriction that you wouldn't be able to receive the money if you're allowed to telework. So the question is, as a health compromised individual over 65, if they work for an essential employer, in this case a grocer, and cannot telework, is that person's or what is that person's options if they need to stay home and doesn't want to quit or lose their job? I'm sorry, does that make sense? I'll reread it if not.
I think I got it. Well, what I feel like that would play into the paid leave, wouldn't it?
I think so. So I know that you did have one of your slides up that said if you're able to telecommute, then you wouldn't be eligible. So I think that's in reference to that slide.
Oh yeah, I got you. So the question is, Yeah, so this individual is able to telework?
No, they work at a grocery store, but they're immune compromised, so they don't feel safe going to work, I guess.
Yeah, I do not know how that would work out, but I can do some research and get back to you or provide it to the chamber staff.
That would be great. Thank you so much. And we'll just add that to the information that's loaded on our website with the webinar recording. Okay, thank you, Brent. And next question. Are employees defined as those who receive W-2s only, or does it also include those who receive 1099s?
It includes both.
Perfect, thank you. Okay, next question. What if you are self-employed with no payroll? What documentation do you need to provide to a lender to get the Paycheck Protection Loan?
I think you would provide your previous years, however you have filed your taxes the previous year, that's what you need to provide.
Okay, perfect, thank you. All right, next question we have. We have a comment here. Says, I work with the banking industry and most do not know how they're going to handle this, but are working towards implementation by tomorrow. So that's just a comment from a previous question that we have. We have another question. I filled out a $10,000 loan last Friday and still have not heard anything. Is this normal?
Again, I think it's normal in this week because they're still sort of figuring it all out. I expect starting tomorrow and moving forward, I expect things to be much smoother.
Perfect, thank you. Next question we have is from Mike Carolyn. Is there any guidance as to whether if a business used the PPP loan funds to prepay rent or similar eligible expense during the 8-week period, would that be eligible for forgiveness? Or do expenses need to be in the ordinary course in order to be forgivable?
I'm not tracking. So
I think the question is, you have that 8-week time frame to spend money on qualifying items. What if you prepaid ahead for, let's say, your rent or other utilities out that you normally wouldn't have spent in that 8-week time frame?
I think they will work with you in that case. I don't think that would be a problem in getting the money.
Okay, wonderful. Thank you. I have just a couple more questions here that have been shared. Okay, what if we have an employee, for example, leaving on maternity leave or being deployed for the military? They are not being terminated and will stay on board, but will not be paid for time not worked. How would we account for payroll under this payroll grant?
That's a good question. Honestly, I'm going to have to track down the answer to that.
No problem. We appreciate you and we appreciate that. Okay, just a couple more questions. I think you already answered this one. Would tips be included when calculating the average payroll?
Yes.
It would, correct?
Mm-hmm.
Okay. And food services have losses as it relates to perishable items due to the disruption in service. Can that $10,000 grant through the SBA Economic Industry Disaster Loan be utilized for that type of reset?
Yes.
Okay, perfect.
Now, real quick, going back to the first question was about using the funds to refinance. I am not sure if you can do that. But if you send me that question, I'll find the answer.
Okay, wonderful. Okay, can self-employed people qualify for unemployment? And is the website being improved?
Which website?
Yeah, not sure. Cheryl, if you could be a little more specific with your question, we'll come back to that. Okay, question about calculating payroll costs. Would we use net pay or gross?
Let's see.
I'm going to jump in while Brent is looking that up. So just to frame this, this is brand new legislation that was passed 5 days ago, right? So this is going to take a little while to work out. We wanted our members to have the first look at how to get in the queue for this. We are going to present more content with further details on this next week with people from the HR world, the accounting world, to add further detail to this. If you, we will make a note of all these questions and we will attempt to answer them through our communications. You can also reach me or you can reach Amy, and we'll make sure that we get answers and track this down. But we know this is complicated, and we know this is going to take a little while to get to the bottom of some of the fine points of this. We wanted to give you all as close access to the information as we had it. It got signed into law Friday night. So it goes live tomorrow. We wanted everybody to have a strategic place in the line, so to speak, and we will give you all as much information and detail as we can, and all of our webinars next week are geared toward helping you pivot in this time, including how to navigate this very complex world of SBA and these emergency loans.
In terms of net or gross, I don't have that in front of me. I'll find out.
Thank you so much. So I think we've answered most of the questions, and do appreciate you trying to answer these questions that I know are very detailed and sometimes out of the scope of your work. So thank you, Brent, for that. And to everyone on the call, as Betsy mentioned, we'll do our best to answer these questions and to include as much as we can on our website in the area where we'll have the recording as well. And our I'm sorry. In the chat box here. So we'll include that in our follow-up email to all of you, and you'll be able to access that information hopefully there. We will have several webinar topics that will be addressing some of these questions next week. So Betsy, if you would like, I will send it back to you to close us out.
Great. At the moment, do we have any other questions? Let's see. I think we've either got them all queued and we're going to get back to you on these. Look for our daily briefing tomorrow, which is we're going to do our very best to get the Federal Reserve list of the SBA 7A lenders. Hopefully, if you have a lender already, you've been in touch with them. One question I had for Brent just before we go, how will this package affect what we've got at the state level? Right now, we've got emergency disaster bridge loans up to $50,000. Those are still in play, and they're still processing them, right, Brent? Is that correct, as far as you know? Yeah.
Right.
So, and those, our understanding is that those are going to be faster to access because Florida is a bit better at managing emergency disaster loans because of the hurricane load we've had. But what we would encourage you to do is make sure you've applied for a state emergency bridge loan, because it may come through faster than this, it may not, but we want you to be covered both ways. Those are two separate pots of money, and we want to make sure that you're applying for both of those. And if you've heard our communications in the past from the, what was it, family coronavirus, I don't even remember what it was called, from 2 weeks ago, the second package that came through a week before last. If you've applied for that, we want you to stay in the queue for that, because there may be further benefits accruing to you through that program as well. So there's lots of different pots. We want to make sure that you're accessing all of those to your benefit, and we're here to help educate you on, as they come out, what's available. But again, this is super early information. We will have lots of detail coming into next week. I think the point is, make sure you get on the phone with your lender or get your application in tomorrow. We can help you all sort through the finer details of that, as we all seem to understand it better. As I said before, this is a 900 page piece of legislation that came through on the heels of a 1,500 page piece of legislation that came 2 weeks ago. So we're all managing the flow of information as it comes in very rapidly. Well, we want to make sure that you are tuning in, and not only just to our webinars, but also following us on social media and getting our midday briefing. As we said, tomorrow morning, we have Good Morning Winter Park, which we have at the Chamber Building every first Friday of every month. We broadcast that live over Facebook. Tomorrow, we will be broadcasting that in the morning, and we would love for you to log on and see Good Morning Winter Park, which we're doing that through Zoom tomorrow, I think, as well. So log on and make sure that you learn from the Center for Health and Wellbeing in Winter Park. We're going to hear from Lindsay Kist, who's the Winter Park Health Foundation Communications Manager, and Kate Stone, who leads the Welcome Desk at the Center for Health and Wellbeing. And they're going to give us some health and well-being tips to manage during the pandemic time that we're all at home. I want to thank you all so much for spending your time with us today. We're here to be a resource to you. If there's anything you need outside the scope of this call, do not hesitate to reach our staff. Our emails are on our website, and you can reach us at 407-644-8281, where our community care coordinator is available to be a front line to answer your questions. So please do follow us on LinkedIn, Facebook, Instagram, Twitter, and receive our newsletter. Thank you for being with us today. Good Morning Winter Park again will be held on Zoom at 8:30 tomorrow morning. We hope to see you all then. Many thanks again to Brent Manning and the United States Chamber of Commerce for all the advocacy work and the great job you've done helping us get more informed today. We appreciate it. Y'all have a good evening.
Thank you.